Scott Wren is Senior Global Strategist with Wells Fargo. Kenny Polcari is Director with O'Neill Securities, here with us at Post 9. Good morning to both of you.
Hey, John.
Kenny, it's getting real with these tensions. And as I look at least the tech names that are down the most, it's not as if China exposure or even European exposure seems to have the most to do with it.
I think it's just angst at the moment, right? Look, we're at a key point right now in the S&P, right at the 50-day moving average, 2710. I said it in my note this morning. You actually wanted to see the market, if it broke 2745, which we did right in the opening, you wanted to see it go there. You want to see it test this level to see if it's really defended. But to your point, it's kind of this risk-off mood, this sense that the people are going to take money out of the stocks that have well outperformed and put that money, whether they reinvest it right away or they put it aside and they wait for kind of the anxiety to settle down. But nobody should feel like today it's just throw everything out the window kind of a day with people panicking. It isn't. It is kind of slow and methodical, but it does feel like it's getting certainly more real.
Never panic. Never panic. Scott, what should investors do as they watch these trends? At what point should they make some kind of a shift in strategy?
Well, John, I don't think they should really shift strategy. I mean, our macro outlook is good. It's not great. I mean, we think the cycle is going to continue. We want to be in things like industrials, which have obviously gotten hit here lately, consumer discretionary, financials, those types of things. We don't want them being defensive. And, you know, Kenny mentioned a bunch of technical support. And really, I would argue really anywhere from here for the next 50 points down to the 200-day moving average. I mean, if you have cash on the sidelines that you want to have dedicated to stocks, I mean, you need to be stepping in here. I mean, we've had umpteen opportunities since February 9th to buy stocks at really good levels. And if your forward outlook is good, which, as I said, ours is, you need to be stepping in here. So I don't think we're going to have a trade war. I think that's a low probability event. I think we had a great run since April up to the recent highs, and now people are taking a little money off the table and they are selling those liquid names that have really run hard. And I think it's just natural market back and forth, and you know, this is going to equate to another buying opportunity.
Scott, you sound like a man who believes U.S. equity is going to end the year higher. What's your target?
Well, you know, Morgan, our target, the middle of our target range is 2850 in the S&P 500. So that's not all that far from where we are now. But on a total return basis, let's call it, you know, 9% for the year, something like that. You know, clearly next year, our earnings growth isn't going to be anywhere near what it's going to be this year, but I think you're still going to see a positive return in 19. So, you know, we definitely want to be invested here. We want our clients invested. We want them leaning towards sectors that are going to benefit from this continuation of the recovery.
Kenny, people don't seem to want to call what's happening here a trade war. Even though we've got actions and counteractions, real money is about to start at least being affected. Does it matter what we call it, and at what point does it become a real concern?
Well, so I think, you know, when you throw the word war in anything, it creates a problem for people, right? And so I think people are trying to avoid that. I mean, I think they are trying to walk us through it, and I agree with Scott. In the end, I don't think there's going to be an all-out trade war, but I think there is going to be some angst and some nervousness until we really get some clarity. And look, if you start to break technical levels, like if we don't hold 2710, I think Scott is right. Then you're going to test lower from there. And the 50 and the 100 are right together here at 2710. So if we break that, then 200 is going to be the next move. And if you're a long-term investor, you should absolutely be looking at that as an opportunity. But the trader types and the fast money types are going to be the ones that are really going to create all the noise around it, because they'll take advantage of that noise, right?
Hey there, thanks for checking out CNBC on YouTube. Be sure to subscribe to stay up to date on all of the day's biggest stories. You can also click on any of the videos around me to watch the latest from CNBC. Thanks for watching.